What I want is Kenny here from Property Stories, and today we're gonna go through another loan offer letter. I did this before previously with another bank, but now audience has graciously volunteered the loan offer letter. Thank you so much. You know who you are, and you're watching this. Thank you. It's offered the loan offer letter for me to actually do a review and read to all of you, so that we can all learn together what are the terms that you need to understand, okay? And sometimes terms, what are terms mean and what you need to understand. I will admit, I'll be the first to admit this one. Sometimes I read, I also read it because it's too lengthy. Lawyers speak, I don't understand. So if you don't understand, make sure you get a banker to ask the bank, okay? And well, I could tell you this, even if you don't understand, unfortunately, if that's the only bank that is approving, you're gonna have no choice. Okay? So rather than think so much whether what this means and what that means, what you need to know is that the terms are clear. If you pay, you're okay. If you cannot pay, we are not okay. That's all the banks function. That's how all the banks function. And the terms is not changeable. Okay? So we can only understand and we can only fulfill our responsibility, which is to repay the loan on time. Okay? And before we actually own the asset outright. So without further ado, let's start with this. So every bank, right, when your first page, the first page or sometimes all the pages, usually the first page, we will have a letterhead here. Okay, you can see I'll do a square. This one must have a letterhead. And this letterhead is either the bank or the Islamic bank. Okay, it can be Bank A, then Bank A Islamic. Then you will know whether it's conventional or Islamic. Okay, conventional or Islamic financing. So the first start, you will always have the date of the offer letter, then name and address. This one cannot wrong. If wrong, please screen change. Then it will be the letter offer facility of term loan 574600. Okay, so the product name, purpose. Product name, this one have to register with the central bank, okay? Central bank before you get released. So the facility one, if you have two facilities, you have facility two, sometimes you have the combination of the term loan and overdraft, okay? Term loan and overdraft, remember? Or term loan and also another term loan, because this one is refinance. Remember, refinance and cash out. The second one is also term loan. So facility amount, principal facility is 574600. Prescribed rate BR plus 0.42% per annum. The interest rate for first year shall commence on the date of first drawdown or from expiry of 3 months from the date of this letter, whichever is earlier. Interest rate shall commence on the date of the first drawdown. Usually, if the drawdown, if it's sub-sale, you will be within 3 to 6 months. Drawdown here meaning disperse, meaning the bank actually let go the money. Or from expiry of 3 months. So it means after expiry of this letter offer, means this is March. So after June, the interest rate will start. They will start counting the interest rate. Does that mean that you have to pay more even though no disbursement? No. This means that the bank will take this rate PR plus 0.42. After 3 months, there's no disbursement. They will take this PR plus 0.42 per annum. Okay. Repayment period 420 months, which is 35 years. Monthly repayment amount 2228. The final installment of such amount as will be sufficient to settle in full the total outstanding due under the facilities, applicable to all other housing loan packages except housing loan with bullet payment. So what this means here is that when you keep on paying your housing loan back at the end of the tenure or when you want to settle a time, the number may be different. Okay, to close that account, the number may be different. So you need to make sure that you actually pay the correct amount to close the account. You cannot pay extra 1 cent or cannot less 1 cent. The account never close. It must be zero. Okay. The above money payment may be subjected to changes as and when there are interest rate changes or as and when the bank performs the portfolio installment revision with prior notice to you. Meaning whatever changes in the installment, the bank will inform you whether it's due to the interest rate changes, OPR up and down, okay, or portfolio installment revision exercise. This one it means reschedule, or you default you go on the MBL, you didn't pay, non-performing loan, the bank has the right to revise the rates, correct? Revise upwards. If you late pay, you communicate late pay, they have the right to revise the rate upwards, right? This is what it means. Revise the rate upwards. Prior notice to you. So base rate at the time when signing this offer letter is 2.63 per annum and may vary from time to time. So 2.63 plus 0.42. 2.63 plus 0.42 is 3.05. Okay, yeah, 3.05. 3.05 very low, right? Yeah, very low. Now the interest is slowly going up already. This one during the pandemic time, so it's understandable. See the rate 2020. The next one, interest chargeable at the prescribed rate shall be calculated daily on the eligible outstanding balance from the date of release on a 365-day basis, whereby eligible outstanding balance means the difference between the outstanding balance and the advance payment or interest offset limit, whichever is the lower. Difference between outstanding balance and advance payment. Remember the loan, you have 3 accounts. You have advance payment, prepayment. Prepayment usually called principal payment. Okay, and outstanding balance, these 3 numbers. Outstanding balance, they got defined here. Outstanding balance, advance payment. So what this means is the eligible outstanding is the difference between the outstanding and the advance. Meaning the bank will, whatever extra advance payment you put extra, advance payment still can withdraw. Advance payment is still can withdraw. Prepayment or principal payment cannot withdraw. Remember, this is a semi-flexi account. So advance payment, the outstanding balance minus the advance payment, that's the interest they will charge you. If there's any advance payment, most of the time we just auto debit from our account to the loan account, right? So, but right now, if let's just say advance payment has extra, you will minus off first and then you calculate the interest. Okay, this part here. This one, very interesting. Interest offset limit means 30% of outstanding principal or such other percentage of limit imposed on the computation of interest, as may vary by the bank, in its absolute discretion from time to time, will be noticed to you. So what this means, let's just say you owe the bank 500,000, and then you also have 500,000. You put in there the account, you're supposed to be the it's just zero interest, right? No. This one, they will limit you maximum 150,000, no interest. The balance, 30%, 30%. So 500,000, 30% is 150,000, correct? So the balance, 350,000, that one they will charge you interest. Okay, no matter how much you put there, is still 350,000, I will charge you the interest. That's what it means by interest offset limit. And most banks, right, actually have this semi-flexi. So if you are the type that want to settle it fast, or you can settle it fast, for example, you take your bonus every year, you can put inside principal payment, or you put inside advance payment, right? You can check in the bank. You are the type like this, and you can check in the bank whether there's any limit or interest offset limit. Some banks don't have one. Some banks, they allow you to put up to 90%. Okay? So not mortgage decreasing term assurance, mortgage reducing term takafut, mortgage level term assurance, mortgage level term takafut. This one MRT. Okay? So MDTA is actually MRTA. Decreasing is reducing and decreasing is the same thing. So reducing term takafut MRTT, MLTA, MLTT takafut. Yes, the banks actually got sell MLTA one and MLTT. Okay? And I'm sure most of you will say, why buy from the bank when I can buy from the insurance agent? It's the same thing. No, it's not. You see the word mortgage here? Mortgage here means tie to your mortgage. Tie to your mortgage. You buy outside, it's actually life insurance. It doesn't tie to any mortgage. It follows you. This one, you follow, the bank is actually the co-owner of the policy. So next we come to the security. Security here is the property. If security is property, security can be cash, security can be anything. Cash, property, shares, any car, collateral, basically collateral. Security here, so you have to define. So first, party open monies, deed of assignment and power of attorney over a service apartment known as unit number skyline. Okay, deed of assignment and power of attorney. Remember, if the property has no title yet, no title, use deed of assignment and master power of attorney. You need to sign this. The property already have title, then you already get other title, you don't need these two lah. Okay. If you redeem and settle early redemption and settlement fee, if you redeem or settle in full the facility within the first 36 months, the following settlement charges will apply. 3% or 90% of total approved facility in the first 36 months from the first release. Or the first release is, you want to know when is the first release, is roughly when the time you need to start paying. Okay, by the time you make your first payment, then you can check when is your first release, and roughly around there. It should be a month, or last month or month before, so it's about 1 month, because most banks have a cut off of 15 of the month. Okay, next, right, we can see this lock-in period here, 3% if you redeem or settle in full. This is a lock-in period clause. If you redeem or settle in full the facility within the first 36 months, the following settlement charges will apply. 3% or 90% of the total approved facilities limit for the first 36 months from the first release. Okay, when your first release, usually is within a month from your date of payment, your first payment, okay? It's less because the bank has a cutoff date after 15 and before 15. Usually, before 15, then your due date is on the same month, but after 15, your due date is a month after the next, okay? No, most of the time is, even if it's before 15 dispersed, right, they will give you a month, okay? They are not like straight away you need to start on the spot, on that same month, because you already earmark your expenses, right? So most of the time you will start on the next month. So it just roughly is about a month from your first payment. 90% of total approved facilities, you see, total approved, that means total loan amount, not the balance. And 80% of total approved facilities for the limit from month 37 to 60th. That means this lock-in period is for 5 years, you notice. It's 80% on the total approved facilities from 37 to 60th. Even though when you pay, you reduce, right? The bank will still follow the total approved amount. This one you must understand. Then the early redemption settlement fees reflects the cost incurred or to be incurred by the bank as a result of early settlement, which may include the cost of fund, cost of capital, liquidity cost. This is all the costs, cost of business. If you disperse early, then you settle early, they incur costs also. Okay, conditions to be fulfilled before release of facilities. The purchase or open market value, if applicable, of the properties, whichever is lower, must not be less than 700. Means your S&P price must write this 700. If it's wrong S&P price, no disbursement. Okay. Special conditions for mortgage plus housing loan or mortgage plus shop loan, if applicable. Okay, this one, remember, for this product, right, it's not applicable because this product, as you can see, this one, Hong Leong Housing Loan. Okay, Hong Leong Housing Loan, this is a Hong Leong bank. This one is Mortgage Plus. This is their actually full flexi account. Full flexi account whereby it's linked to a current account and loan account. So you just put in money, extra money in the current account, it will reduce the interest that you pay automatically. You don't need to tell the bank. It's free to come in and out with no need notification to the bank. Okay, offer subject accordance to this one not applicable, so we're going to skip. Disbursement shall be in accordance with schedule of payment or purchase price stipulated in sales and purchase agreement and subject to receipt or certification by an architect or engineer registered under the Architects Act 1967, Act 117, or the Registration of Engineers Act 1967, Act 138, confirming the respective stages of construction. In layman term is, they will disburse based on the progressive payment of the S&P, and for them to disburse that phase, that stage, the architect cert must come. Architect cert come, then it disburse. Okay. Statutory declaration that the property is for own occupancy if applicable. This one, right? This part here, the bank will always ask you to sign, right? Just sign. Because if you don't sign, most of the banks will not release the money. You need to sign. Yeah, I know. Most of you would be like, sign already, you don't know what you're signing. You sign, and then you ran out, right? No problem, just sign. Because this one is, you declare for order occupancy, and some of you have like, so many properties. This one, you must sign. If not, most banks will not release. The facilities agreement and all other security documents related to the facilities have been duly executed and or stamped registered with the relevant authorities to the satisfaction of the bank and subject to the bank solicitor commission that is in order to release the facilities and the bank interest is protected. Okay, in layman term, what it means is that the agreement already stamped with the relevant authorities, in this case is land officer, okay? Stamped at land office, and the lawyer already checked everything. The lawyer already checked to the what according to the what the bank wants, and then they release. The bank is in the receipt of any requisite regulatory approval and consent from the relevant state authorities, including but not limited to Bank Negara or Economic Planning Unit of the Prime Minister Department, whichever applicable. This one, right, is regulatory approval and consent for the relevant state authorities. This one is for any properties that leasehold you need to transfer name, you need consent also. Even leasehold or freehold, you need consent from the relevant authorities. You need consent from the land office, right? I mean, you change the name, you still need the consent. Okay, what I mean is that even if leasehold, you need the state consent, so the state need to sign. But if freehold, you change the name, the consent, the land office must still be allowed you to change the name. That's what it means. And then the regulatory authorities, right, the relevant state authorities, for this is especially for the affordable housing. If you apply for Prima, okay, or if you apply for government like scheme, let's just say the Jagama scheme, last time we have the 10% guarantee, so 100% loan, right? You need to have that document from the relevant authorities, then the bank will disperse. If not, it won't disperse, okay? So number 7, the disbursement of the loan is subject to the bank receipt or evidence that the developer has obtained relevant approval, or decided it's the APDL. Developer must have APDL. Under the HDA, it must have APDL. If the developer don't have APDL, means the project cannot sell. So this part here, sometimes right, you see when the developer sell before the APDL come out, but the agent will tell you, okay, sir, means you cannot sign the SMP until the APDL come out. Okay, so the SMP can only be signed once the APDL come out. If you can sign before the APDL come out, you will notice like the SMP HDA, it will leave a space for the APDL number, because the APDL number haven't out yet. APDL approval have out, so don't have the number, so they cannot stamp. You can just sign the draft first, no problem. Okay, but if you are dispersed, that means the bank must have all this evidence that is already got approval, then it is dispersed. In case of property free encumbrance, the following additional measures will be taken to establish the ownership of the said properties. Property free encumbrance are easier to fraud and easier to that's why the bank will have this extra clause on number 8. Okay, individual title facility released upon the bank having received original title and duplicate charge in favor of the bank duly registered with the relevant land office and registry. Okay, the result of or additional land search against the property by independent legal firm appointed by the bank panel solicitor to verify the confirmation received from the loan documentation solicitor that the transfer, if applicable, and charge has been presented to the land office. That means here they will your lawyer, the loan lawyer must do the due diligence. All the lawyer must do the due diligence. They will do extra land officers to match the title you given and the title of the land office. So you match, then need to confirm that you are the rightful owner. Then it release. For properties where the individual or document or title structure has yet to be issued and is held under master title, the facility shall be released upon the bank having received written confirmation from the developer or registered owner of your right of ownership in respect to the relevant properties. Okay, this part here is for properties that do not have title. Do not have title, right? That means your lawyer will have to write. Your lawyer will have to write it to the developer to get a consent. Get the consent, number 1, and also to certify that you are actually the owner, the current owner. Because when you change hand, the title, you just on the master title, you write. That's all. Okay. So that's why when the title is subdivided, right, it's very, very important for you to do the perfection to confirm that you are the owner. Okay. Where MDTA, MDR concerned is insurance, not financed by the bank, you may take up the insurance company, Takafu of your choice. this part here, this part here, this part here is a bit, how to say, it's like a trap. I would say it's a trap. I don't know what word to use other than trap, because you see, the bank, imagine this, you are the one doing the business. You want to lend money to this person. Let's just say you lend money to this person to buy a house. Let's just say you lend 500,000, and then the house, the collector of course charge to you now. But let's just say the person actually passed away. Are you protected? You're not protected, because the insurance on the person will pay to the person, will pay to the borrower, not you. So now, of course, you will ask the borrower to secure yourself also, in case that the person pass away, in unforeseen circumstances, cannot work or lose job. So if the person pass away, of course, you will ask the person to buy the insurance and then put your name inside. You are the lender, right? Put your name inside. And now I'm the bank. Okay, I'm the bank. I lend to you. I also have my insurance operator, a Takaful operator. So now you take from another Takaful operator or insurance operator. Is it easy for them to pass to me and put my name as the co-owner of this property, co-owner of this policy? Sorry. What I'm trying to say is that if you want to make life easier for yourself, just take the MRTA, MDTA, MRTA, or whatever TA you want, insurance you want, from the bank that you take the housing loan from. If you don't want to take, you just take minimum and you can buy your life insurance outside. Okay? This one is, as far as I know, the cases that gone through like this, like, I'm not talking about any banks here. I'm referring to in general. In general, we have ran cases where the customer actually opt not to take the bank's insurance, but buy MRTs out or somewhere. For example, like another insurance company, or buy not the one that is partner with the bank. So the process is very tedious, and sometimes it's dragged until so long because they are not familiar with the process. The most important part is the banker also to know who to call. You're on your own. So highly not advisable. Honestly, this one is really not advisable. Please just take on the same bank. Any other terms? This one is the superpower. Any other terms and conditions as stipulated in the main terms and conditions of this letter, the facility agreement, the security document, as may be advised by the bank solicitors. Okay. This one, they can simply just add things along the way, as advised by the bank solicitor. Okay. The bank solicitor, if they say advice based on all these documents, they have something that advise against the disbursement, they will follow. Okay. So this one is just to, at the end of the day, is also to protect the bank at the end of the day. Because they want to simply disburse suddenly without the due diligence, and along the way they might find some adverse findings. Okay. And one more thing, when you see the offer letter, you will see this, name, reference number, name, and supersede. This reference number very important. Reference number is secret. You will see in your secret, your e-secret, you will see your name, and then if there's a previous version, you will see the previous version reference number. So that means the new version will always supersede the previous version. How come that this kind of new LO? Some banks, right? Actually, all the banks they have. Let's just say you change your MRT value, or you change your property, they will change the offer letter accordingly. So it's version 1, version 2. Okay. So it will show you which one is supersede, so you know that this is the old one is void automatically. And your banker will get you to sign the correct one. So let's go to the fourth one. Additional condition, fourth. The building must not be semi-permanent wooden structure. This is not private property, or such other structure as a bank. At its absolute discretion, determining unit unfit for financing. That means here the bank can upfront reject you okay? Reject that they don't want to finance a property. Maybe after they do due diligence, the valuer go and check, is the property is not what it seems. The bank has a right to actually not to disperse the facility or even cancel the facility. Okay? But you will ask me, hey Kenny, I do valuation here. Upfront, I give all the information to the bank, valuation. How come this kind of thing happened? You remember, valuation is the verbal indication. Verbal means talk only. Okay? Then the valuer go there and check the transaction, give you the value. This one is a formal valuation. That's why a valuation report is very, very, very important. Okay? They are like the eyes and ears of the bank, the valuers. There was also cases, right, where the piece of land, right? For example, there's supposed to be a property. When they want to finance, they take photo. Okay, it's a brick and mortar property. But suddenly, the valuers go there again. It's actually a wooden structure. Then that's it. You're going to pull like the financing. It does happen. It does happen. That is why the valuer has to go and make sure that the property is the correct property to be financed. Okay? And that's why we are actually paying for a valuation report. I hope that clarifies. There are cases like that actually. Notwithstanding anything contained in this letter offer, the bank reserves the right to cancel or terminate the facility at any time in the event the bank receives notice that, on 1A, before the property under finance is fully completely constructed and or issued with the certificate of compliance and completion, CCC, or is equivalent, a petition is presented for the winding up. Okay. That means this one, developer or the landowner suddenly bankrupt before you complete. Then the bank just terminate or cancel the facility. Okay? The developer suspend or give notice to any person of his intention to suspend. Okay, this one is actually the SIG project or abandoned project. I've covered this in the previous video. You can actually take a look at the previous video. We'll talk about SIG and abandoned project. If your properties proffered in this letter offer fall under the ambit of stamp duty eligible to exemption, you are required to execute the relevant statutory declaration as provided by the relevant stamp office for the exemption. Okay, this one is stamp duty exemption. Okay, but as a citizen of Malaysia, I don't know whether the rules is still the same or not. You are only allowed one time to examine to waive the stamp duty. Okay, stamp duty. This one is if I'm not mistaken, it's only the SMP, the loan you still need to pay. And then RPGT also once in a lifetime. So when you sell the property, you make the very big money and you know that you're very sure you're not going to buy the big one and sell again in a short period of time. Why not just take the exemption? Okay. The fourth, variation of interest rate. The bank is entitled at its absolute discretion from time to time and without any requirement for agreement by you. So that they don't need you to agree. You're already giving the consent here. To substitute and or change the entire basis of calculating the prescribed rate, to vary, change or substitute the reference rate. Okay. This one, just now remember the reference rate is base rate. That's before. Now we change to standardized base rate, correct? So the bank can actually change without asking you. But then most of what the banks do, right? Most of the banks, what they do is that they remake these old loans. And then if it's a new loan, then they put under a new reference rate. Easier, okay? But they have the choice to change if they want. The rate tell you. To vary such margin imposed above and or below the reference rate. Okay, this one, margin above or below reference rate. That means they may add the interest rate on top of whatever that is prescribed here. This one happens only when you have late payment interest. Because if you have late payment interest, they automatically can increase the rate based on this cost. This one must be inside one. Because if not, if there's late payment interest, and then they want to increase the rate, they have to ask your consent. It's possible, right? To vary any commission discount and or banking charges on this one. Okay, this one, if let's just say you use the loan accounts, usually they don't have any charges loan accounts. Unless you're using the full flexi. Full flexi, like I mentioned just now, the usually we have 10 ringgit and 60 cents. The 60 cents is for GST or SST. Okay? So they have the right to increase to 15 bucks, 20 bucks anytime. This is what they can tell you, okay? To exercise a combination of any one or more, anything They can put all four, they can choose any one of these, absolute discretion, okay? Notwithstanding other terms of this facility, the interest rate charged by the bank shall not be less than 0.0 per annum at any time, And the bank reserves the right to apply the ECOF as a reference rate. ECOF, effective cost of fund. Okay. Reference rate here is the base rate, effective cost of fund. That means the bank cost of fund. It cannot be zero. They're just telling you in the layman term, the interest cannot be zero. Okay? It must be minimum also the effective cost of fund. Meaning here, if let's just say the central bank actually make the OPR to zero, your loan doesn't mean got no interest. You still need to pay the effective cost of fund. That's what it means. 5. Minimum prescribed rate. The minimum prescribed rate applicable to the facility shall not be less than 1.7% per annum calculated on daily rest or such minimum rate. So that means you cannot be less than cost of fund. This minimum prescribed rate given to you shall not be less than 1.7. Okay? Legal costs and other expenses used to be borne by you. It's always here. Legal fees, valuation, stamp duty borne by you. And they will give you usually your solicitor. This is the solicitor for this unit. Okay. Look at this. The facility granted is subject to many terms and conditions attached and the preparation, execution, and delivery by you and the security parties, if any, of security documents in the form and substance certification to the bank. Kindly indicate your acceptance of this offer letter by signing and return the duplicate to the bank within 14 days for the date of letter offer, pending which offer lapse and be cancelled unless extension is given. Okay, this part here, a lot of consumer think, okay approve already. Take my time wait for other offer You see it? When the banker tell you got time limit for 14 days, the banker is not lying to you. Okay, adhere. And yes, can extend. Extend how long? 1 month. Okay, 1 month. After that 1 month, then people ask, I can apply again. Sorry, no need to apply again. You are not serious, please don't apply again. Your banker also got no time to entertain you. Might as well go for another case because they need the sales every month, right? So before you apply, please understand all this, because the rates, right, I can tell you it's not much different from bank to bank. You can just go to the biggest bank of 3 banks, I think will be enough. Okay, based on your profile. That's where I come in. I'm a mortgage broker. I can help you to compare. But remember, my job, right, as a broker is to get you the approval. It's not to get you the lowest rate. It's to get you approval according to what you need. Okay. So upon acceptance, then of course this one automatic will supersede, then you will see the like. So you always have the manager sign and then the address of the branch, okay, on the bank. Okay, number 5. This one, page 6 is where the customer will sign. Accept facility, the terms above, attach the main terms and agree to be bound by them. Okay, got no choice on you to accept. Apply for insurance MNTA. We have checked the accuracy. Okay, this one, applied for insurance or MBTA. So this part here, you declare that you have applied. So you all say that you all don't want to buy MBTA from the bank, so you apply from other company. You can put it here. But when the banker tell you, right, that this actually comes to apply insurance, renewal insurance, to give you a better rate, this is what it means, apply, so that you are applied. That means you give the consent to cross-sell, okay? Once you take a mortgage, we cross-sell you the home insurance. You receive, this word here, receive. This word here, a lot of people miss. Receive and read and understood product disclosure sheet provided by the bank. This product disclosure sheet is supposed to be given to you before you apply. And then, before you even process a loan, right, the product disclosure sheet, you need to sign, meaning that you have read and understood the product disclosure sheet. But I can guarantee you 99.99% of you do not read the product disclosure sheet, okay? You don't know also what to ask the banker. You usually ask the normal things like interest rate 10-year loan can get or not, that's all you know. And frankly speaking, right, that is enough. I mentioned many times the products are homogeneous, meaning it's not far different from each other, okay? or this one is document submitted, facility, this one authorized representative. So that's represent, this one represent, obtain a consent of person. Okay. This one is like for third party charge. For example, you are the only one apply for those, but the owner of the property may be you and your wife. So you have obtained the consent of the wife, your wife or your spouse, or whoever it is, a co-joint owner, to apply for this loan. And that person is aware that this property is charged to the bank, and you go apply for loan. Confirmed purchase is net of any form of price discount, adjustments, rebates, and or any form of benefits offered by the developer. This part here is where the developer will sell whatever price that is put on the S&P is net of discounts, rebates, or any other form of benefits. This any other form of benefits, do you know that S&P or no legal fees, free legal fees is still a benefit? Free furnitures, all these all are benefits. So the price is net of this. And that of any form of rebates or adjustment, that one we all know is possible. Which project got no rebate or discount? No rebate or discount, Malaysians, we won't buy. Normal. Do business like that. You go to anywhere also you want discount. You know discount, you will most likely not buy. I think the culture here is like that. So this part here is just to make sure that it's put it in the law, the legal document is complete. Okay? There are cases, right? I don't know whether you have experienced this, but there are cases where when you open, right, the bank give you 90% financing. Then suddenly, when you another person apply later, you become 80%. What is that? Then you ask the bank all this, ask the agent. Then the agent say, "Oh, the bank found out discount." Yeah. And at first, no, so mystery check. Actually, the banks they are supposed to do mystery check. A lot of banks actually will call in, and the developer office they'll call the agent and ask, "This one how much discount? This pretend to be customer, how much discount? What's the rebate like? So you ask, rebate 20%. Okay, 20%. So I cut another 10%. Okay, you make it the net. The loan amount is actually off of net of the purchase price. 20% discount, right? For example, 20% rebate. So I give you 80, 100 minus 20 is 80, 10% you come out, right? So now 100 minus 20, because you need to only come out 20%. So I give you 80%. 80%, you still have the loan, you still don't need to come out of payment. But actually, down payment, right, is also something you need to come out. Something you need to come out. But because now no rebate, now got rebate 20%, sorry. Now they got rebate 20%, so you didn't come out on payment, right? So I cut the margin. That's why sometimes you see, right, the projects for last time you need 90%, then your friend or whoever come later earn 80%. Same bank by 80%. So as a banker, we cannot control this. And developer also cannot control this. The more agents they appoint, the more mouth it is they can run. It is impossible to control. You see the ads out there, you as a person, as a buyer, right, you also curious, you just leave your name there. You also, the agent also will want business, how they know or not that one is mystery shopper from the bank? No, because everybody will ask the same question: what's best location? What's the discount like? Can I have the sales kit? It's normal. So this one, I can tell you very simple. It's just if you see the bank 80%, you just apply other bank. No need to bother. Don't try to change the situation. You waste of time. Unless of course you got affinity with that bank, your facility all there, and then you don't mind the 80%. Okay, then you go ahead and take lower margin. You don't mind to go in and take. Okay, this is actually a product disclosure sheet. Every facility that you take in the bank, it has this. Even your hire purchase, your personal loan, your ASB, all must have this. And you are supposed to read and understand, and then take this. Okay. But so in this case, let's read the product disclosure sheet together before you decide to take out the product below. Okay, kindly read this product disclosure sheet together with the terms in the offer letter before you decide to take out the product below. Hong Leong Housing Loan. Please do not hesitate to contact the bank for clarification if required. So this date of issuance very important. You need to issue the product disclosure sheet. Actually, the product disclosure sheet you issue before and issue upon signing of the offer letter. Okay, upon signing of the offer letter. So what is this product about? Facility calculated on variable rate basis and we are offering your property as security to the bank. It offers flexibility in repayment and interest saving, calculated on variable rate basis, daily rate. Okay. Any excess payment received after deducting an installment or any charges payable is deemed as advance payment. Example, just now we saw the installment is 2228, right? Let's just say the installment is 2,000. So you pay 4,000. So that month installment is 2,000, right? So 2,000 they put aside. Then you pay into the loan account. You pay into the loan account. Then the extra that 2,000 is used as advance payment. So you save your interest. Okay. Advance payment will not be considered a prepayment. Okay. Advance payment, prepayment. Advance payment you still can withdraw. Prepayment you knock off principal. You cannot withdraw. You can cry mother, cry father. You still cannot withdraw. Okay. So be careful when asking for prepayment. And prepayment usually they have extra steps you go through. For example, you need to go to the branch and you need to fill in form. Yes, the money is in your loan account, but you still need to fill in form. Say, I want to do prepayment. Then the bank will do it. Okay. So withdrawals are allowed from excess payment under advance payment. And see, with return notice. This is why you just write into the bank. Nowadays, a lot of times you can just do online. Banks are even semi-flexi now, like full flexi. So you can just do online. You no need to write into the bank. And these extra features are, frankly speaking, so many people is asking. And then at the end of the day, I get rejected. Like, oh, you only got semi-flexi. I need to write in. And then the other bank need to write in. But actually, I lose because of interest rate. So actually, customer don't want to tell you because of interest rate you don't want to sign, or because of whatever it is you don't want to sign. You will tell you these kind of things, which is normal. It's a small screen. Most of them I've seen so far, I never use this and withdraw one. Once in, miss in. And most of the people, right, they have enough money just to pay the housing loan for that month. No extra. Next, number 2, what do I get from this product? Term loan. Facility amount. Okay, this description. You follow your description. That means but this PDS, price to you must follow your offer letter. Overdraft, on demand. The BR is 2.63, correct? Okay. Based on price, margin based on net selling price, okay? And not based on SPA price. Okay. Margin of financing, net selling price. So just now remember your declaration, your net selling price, your SPA price is your net selling price, right? Then the margin of financing is based on that. What is base rate? Okay. They have to explain to you the reference what they use. Offer is 2 parts: benchmark cost of fund and statutory reserve requirement (SRR), cost imposed by Bank Negara. Our benchmark cost of fund is reflect the cost of raising new fund in prevailing market condition and is currently based on 3 months LIBOR and customer deposit rates. This is the part before they change to SBR. Every bank has a different BR, right? Up and down. And this is the one. Okay. And this is calculated by cost of fund plus SRR. Now we are using SBR, so we just follow OPR and easy. SBR plus something. What are the possible scenarios to trigger a change in BR base rate? Rise and fall due to changes benchmark, changes in SRR, changes in benchmark occur due to changes in OPR as decided by the Bank Negara, as well as other factors such as market funding conditions, future interest rate expectation, and industry deposit trend. Okay, so that means they will change. If change, they will inform you. So number 5, right, on this PDS, you see the historical benchmark COF since March 2019. COF here is cost of funds now, So the benchmark COF is going down. Cost of fund is going down, meaning at least the cost of borrowing is also going down. Okay. Then number 6 is, what are my obligations? Repayment will vary if BR changes. They will give you this. So today your BR is this, and it goes up by 1%. How much you'll be paying? Okay, the installment, you see, go up by 1%, go up by 2%. This one must have one. And then they will tell you the interest cost, the total payment amount, okay, total interest and total payment amount. This one is interest plus principal, this one is only interest. This one, this small one here, pending commencement of the monthly repayment as provided in the table below, above, you are required to pay the bank money interest if any and calculated at the prescribed rate or effective date on the daily outstanding amount or based on monthly rest where specified applicable from the first disbursement of the facility and commencing from such date as advised by the bank in writing. That means you cannot simply vary your money installment until the bank actually gives you in writing. So unless and until you receive in writing, you are to pay the monthly installment accordingly. Okay? And I understand a lot of people actually will like start payment, then the start paying, then the bank letter came much later. Or some even they will pay the fixed amount every month, the installment, but then they did not receive any SMS or any letter from the bank, and then they keep paying. If you short the payment, in secret you'll be considered as you late payment. So the 1 month you short is late 1 and 2, 3, 4. This one will affect your secrets. So every time, when now the banks are do standing instruction, they insist on standing instruction. The standing instruction is a variable instruction. Unless of course you change your account details. Please don't do that. Everything I like to automate. So I don't like to change and look at it. Once I put the money inside, pay and that's it. Then I forget about it. Okay? I have better things to do than watching my loans and dealing with the bank. Like this YouTube video. So the next one also you need to see the bank may vary your monthly repayment amount when it is insufficient to service your loan interest or when the monthly principal repayment portion is less than 10% of your monthly repayment amount. Less than 10%. Oh, okay. Principal repayments. So they vary your repayment amount. This one is like at the end of your borrowing or if you pay down very fast, then of course they have to adjust the repayment. Whenever a revision of money repayment amount by the bank or you are required, or this one, money repayment amount by the bank or you, but if the bank actually do it and change the repayment for you, lower it, it's called risk schedule. Okay, if it increase your payment because you get payment interest, that's penalty. Okay, so this one is they give the bank the limit. So number 7, what other charges do I pay? For a full list of charges, please visit the website or scan. Okay, make sure you can just visit the website here. These charges here, it means like those EPF retention statement, those you want to print your statement, okay, hard copy. I'm talking about hard copy. Hard copy bank, print, in general, I've seen one page is 1 ringgit. Okay, and they will get. Then you need to write in to request on HQ, and usually the branch will request on HQ to print. It's take a tedious long time. And even EPF also, EPF statement they will minus off from your account, so it's okay that one. Okay, next one. What if I fail to fulfill my application? No payment charges at the rate of 1% per annum will be additionally levied on any amount in your areas. That means if let's say you have late payment on amount 1,000 ringgit, example, okay, 1% per annum will be charged on that. Okay, on top on any amount in areas from the time we default until such time in areas are paid, both before as well as after demand or judgment. Okay, this one letter of demand, then judgment, court judgment. If you default on any payments due at the duration facilities for a period of 100 days from such monies become due and payable or such period as the bank may notify you from time to time. Bank shall at discretion vary the prescribed rate. That means the bank will increase the rate, and how much they increase is up to you. Okay, if you default 100 days on the date that it becomes due, example, the due date is on the 1st of October, then you didn't pay default until 100 days from that, then the bank will vary the rate. And on daily rest or such other rate as the bank is on balance outstanding, whatever balance you gonna this rate, additional rate. So how much is the rate? Here, outstanding in the period. Additional interest shall be chargeable at 2% per annum. Additional interest on top of whatever you're paying, they add another 2%. Okay? You may set off any credit balance and any account maintained in the bank against any outstanding balance of this facility with written notice. Okay, this one is something that you all need to understand. This term here, if you, let's just say you have a few facilities in the bank, example, the housing loan, and another one you have an FD. You default on your housing loan. The bank has the right to take this FD, liquidate it to pay your housing loan. It's in the cross, okay? The bank also has the right, if let's just say you have another loan, although you'll be paying nicely, the bank still has the right to sue you and actually bankrupt you. Sue you bankrupt, or sue you, or increase the rate on all your facilities, and not just one. Okay, not just one that you defaulted. So you think that you're actually safe when you default one. When you default one, right, others are all affected. So don't forget that. Legal action will be taken if you fail to respond to reminder notices given by the bank. Your property may be foreclosed and you will bear all the costs. You are also responsible to settle any shortfall after your property has been sold. Legal action, of course. Legal action, this one is vary from bank to bank. But in general, if 90 days consecutively, you do not pay, consecutively, you do not pay at all, a single cent at all, the bank will send, after the first month, the bank will send you a letter reminder. Okay. Then the second month, they will go for letter of demand. Letter of demand is issued by a lawyer, where to demand the payment, the bank's lawyer. Then, after that, I think every bank is different from bank to bank, but after that, they will go for foreclosure. The foreclosure means auction. If the auction is shortfall, you are still obligated to settle, and the obligation to settle is not by the installment. It's bullet payment. So if you do not have that money, the bank can actually declare, sue you bankrupt. And remember, when you are sued bankrupt, other banks, other creditors can come after you, even though your facility is in good standing with other creditors. Okay? Remember that. Legal action against you may affect your credit rating, and this will cause your credit to be more difficult or expensive to you. This part here, if you still have credit stuff with the bank will definitely increase the rate. Okay, they cannot collect from you, or they just sue you bankrupt. Which suing bankrupt is not as bad as you think. Okay, I understand that a lot of people is actually suffering from this increase in prices and rising in costs. So I'm actually in the midst of doing a video addressing all this. What if you cannot pay the bank? So stay tuned, okay, to this channel. I'm still doing my research. A lot of things to do. More important. Okay, number 9 here. What if I fully settle the loan during lock-in period? If you redeem 36 months, this one, the charges applied. Okay, these charges, right, you notice it's the same one that is written on the off letter above that we saw, right? The page. It's the same one. So it's actually on your product disclosure sheet to put it on the clause. Number 10. Do I need any insurance, takaful, or takaful coverage? All residential property are required to be insured on takaful coverage obtained under house owner policy, while commercial American properties to be insured covered under fire policy. So that all residential properties required to be insured on takaful obtained under house owner policy. So you tell me you don't want insurance, you tell me you don't want takaful? You saw this PTS here? Once you sign, that means you are agreed to it, So don't, next time, right, when the banker asks you to take insurance and takaful, or takaful for your loan, what you can do is, give me your PDS. I want to see what your PDS say what. Because I've seen some PDS, they will put there not required. Okay? Not compulsory, but highly encouraged. They use that exact term, not compulsory, but highly encouraged. Okay, some like Hong Leong Bank, they will put here all residential required. Required means it's compulsory Okay, you take how much, or you take minimum, also never mind, but don't take. You got see here required. Okay. Number 8 here, you are insured you are to ensure that the properties are adequately insured up to their full insurable value against loss or damage by fire, lightning, tempest, flood, riot, blah 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 blah. Such risks as the bank may require. Okay, that means the property insurance, right, it's up to you to insure it against fire and all the other calamities. You have to furnish a certified true copy of policy or policy taken up with bank endorsed and loss paying mortgagee, together with evidence of premium takaful under policy or policies to the bank. In the event the bank takes up the insurance or takaful policy coverage on your behalf, the bank will debit the fire insurance into your loan financing account with prior written notice to you. This part here, B, right, is a lot of people don't know. A lot of people don't know when they buy a strata property. Every year, when the fire insurance is charged, right, it's come for two places, Number one is your JAB must buy. Number two is your financier must buy. Your financier will buy. So you are actually insured by two policies, but you can only claim one. So what you need to do is to take the master copy from your insurance, your JMB. Every year you need to pay fire insurance, right? You pay the fire insurance, you ask the JMB for the master copy, and you email to the bank, ask them to cancel. If they have already charged into your loan account, ask them to cancel. So some banks, right, will add into your loan account. So that's why every year you pay and pay and pay, you will see, why the amount still don't reduce much because of this. But some of the banks, right, they will add into a portion called other miscellaneous charges. They call miscellaneous charges. That is fire insurance. It is separate from your loan account, so you need to settle that fire insurance. Okay? If not, the bank will continue charging you and charging you and charging you. Okay? So it's two charges both sides in your paying. It's a waste of money. So every year you need to do. Some banks, you have to read the offer letter. Some banks are kind enough. They take it as is in good faith. What does it mean? That means you take it in good faith that the JMB will do their job to buy that fire insurance for the strata property. You do not need to email the bank every year. No need. Some banks are doing this. Okay? So read their terms and conditions, read their offer letter properly. They will state there. Okay? Next one is mortgage decreasing term assurance takaful, optional unless it is under a promotional criteria as stated in letter of offer. Okay, up here, they write here residential required to insure or takaful, but now here they write their product. This is their product. House owner policy. Okay, house owner policy. This one, right, house owner policy, if I'm not mistaken, I think it's life insurance. Because the bank, right, if they co-own the policy with you, it will be tied to the mortgage. Okay, so this one I think is under house owner policy, means that you need to have adequate insurance for yourself. Because if anything were to happen to you, yes, insurance will still pay your beneficiary, but the creditors can come after your beneficiary. Okay, and it's up to your beneficiary whether still want to pay or not. But that one is a very complicated matter. I also in learning how this goes about actually, what will happen if someone actually pass away and the insurance money pay out to the beneficiary, both for Muslim, non-Muslim. For Muslim, I think you go to the Faraid law, okay? It's quite clear cut, it goes to Faraid law. But non-Muslim, I'm not sure. I need to do more research. But for the sake of discussion today, I think this one is house owner policy is life insurance when I'm mistaken. Because down here, right, they mentioned MDTA, all these are all bank products. You see this clause, optional, unless it is under a promotional criteria as stated in an offer. Okay, a lot of people will tell you, this one will ask the banker, this one optional. How can you force me to take? How can you force me to take? You are right. Actually, we can't force you to take. But you want a better rate, right? You want a better rate. It is under promotion. Promotion means, in here already you say, optional unless it's a promotion. That means, if you want a better rate, you must take. Okay? You must take. You want a board rate, no problem. Take out and then give you a board rate. So, when the banks, right, they price their interest, they price their product, especially housing loan product, you will notice if you take insurance, if you take MRTA or MRTT with them, the price always cheaper. Most of the time it's cheaper. Because you have the bank actually manage the risk. So that's why they give you a discount on it. Okay, you finance inside, will give you a discount. If you don't take, right, the rates usually are higher. And you see, this is actually a play in the marketing. You saw a promotional criteria. When you see any rates, right, to attract the clients, they always use the word from, then the lowest possible onwards. From, let's just say from 3% onwards, example, from 3% onwards. But how many people can get at 3%? Don't know. What's the criteria you need to get that 3%? You don't know. Okay? Anything that is higher, it can be a range. They have the board rate and their promotion rate. Always say that one. Board rate, promotion rate. The board rate means it's very high lah. You don't need to take insurance okay? This is actually a marketing ploy lah. They play with the pricing to attract you in. That's it. But you know what? As I get older and I see more and more cases where people actually with no MRTA or MRTT actually pass away, I highly encourage you to take. I will explain why in another video. I'm doing also some videos actually. I got no time to do all. I'm doing another video on talking about insurance. I will explain why. And it's based on real life examples. Okay? Next one. However, you are encouraged to take to protect your family from losing the property due to unforeseen circumstances. This one is not a threat. Especially if people you have own stay property. If let's just say you are an overseas or what, you buy the property for your parents to stay. Anything happen to you overseas and your parents claim the insurance, you got no insurance, you got no MRTA to claim, cannot cover, the bank has the right to auction the property where your parents going to stay. Or if you are working, I don't care whether you are working husband or working woman or what, or single mother, I don't care, doesn't matter, as long as you are the breadwinner of the family. Imagine today your children, your wife got no house to stay because you have passed on, or you vegetable cannot work, and no MRTA. It's not nice to hear. A lot of people will say this is a scare tactic, asking us to buy. Yeah lah. If don't scare you, you might not take action. But scare you too much also, it's like me selling and hard selling, right? So I'm just trying to say, just think for yourself lah. If you don't want to buy for your own self, buy for your loved ones. Okay? Insurance is not about who's the one that pass on. It's about who's the one that's going to live after you pass on. You're going to pass on. You also going to be the next adventure. Your next adventure awaits you. Okay? It depends on your belief. But the people that you love is the one that is going to feel the pain. Okay? Both emotionally, and if financial is not well planned, it's financially as well. Okay, next one is commission is not applicable. Commission is not applicable to stream. What is this? Commission is not applicable. Okay. I think this one is commission is not to you. It's to the bank. I'm not sure what it means. Commission is not applicable here. I think that is what they mean. Because insurance, like every insurance policy they sell, the bank sells to you, the bank actually get paid a commission also. It's called a non-interest income. It's under non-interest income. So next one. Okay, let me finish reading. So it's halfway. Commission not applicable when the ML is financed by the bank. The bank shall only release the premium, either first loan release towards financing or commission not applicable. Sorry. This commission not applicable is, I also don't know what is this like. Never mind. I think it's the commission that you see in the quotation. Sometimes the quotation got see commission. That commission part is for the bank, not for you. So next, first loan release. Yes, the takaful, the premium, if you finance with the bank, it's only come after the first loan release. Okay? That means you have to check the insurance. Some MRTA, once they cover upon rental acceptance, that means once they accept the policy, even haven't paid, the insurance company haven't received the money from the bank, or because the bank only release when disburse money, you are already, the policy is already enforced and you're covered. But most banks, right, upon disbursement only you're covered. When you disburse, then you're covered. So there's a lot of difference, especially if you're buying under construction property. Today you sign SFP, it can be up to 1 year later, then you start paying, start repayment. So within now to that next year, right? As I say 1 year. And anything will happen to you if you're not covered means you're not covered. The property, the bank won't disperse, and if you are still around, predictable, it's still not covered, you still have to pay. Okay? So that's the thing lah. You have to ask your banker about this. Bank has received letter acceptance, or at any time thereafter, the bank discretion subject to the following. Okay, this is what I mean. Usually it's covered on first loan release. So sometimes, right, any time thereafter, bank discretion. Okay, the bank has received letter acceptance, letter offer issued by insurance company. Sometimes, right, the disbursement not only take 1 year, it can take like 2 years. I don't know why it's sometimes so long. Maybe developer has money to build, so claim one time go. So that's why you see your installment starting with a higher amount. So that's why the bank might allow you to cover upon receiving letter acceptance, letter offer from the insurance company. The bank has not received any notification or insurance company full of your rejection or appeal. So that means the insurance start in force because the bank did not receive any letter from Takaful operator or insurance operator regarding your rejection or appeal. You are not deceased prior to the first release. That's okay, and that's self-explanatory. In the event letter acceptance or letter of issue by insurance company Takaful operator expires on or before the first loan release, you will submit a fresh proposal form for evaluation, and a fresh letter of acceptance or letter of offers shall be procured by you. This part here, right? I tell you frankly, as a banker, this is one thing I really hate. See, we get paid only once. The commission only comes once, but the follow-up, right, it can be until your loan release, which is like 1-2 years later. This is what it means. The letter of acceptance and letter of offer, there's usually has validity, and the validity usually is about 1 year. Sometimes 6 months. Okay? So after the validity, right, the banker need to contact you to get your health, to sign form and declare that you're still in good health again. Okay? And then sometimes, right, your circumstances has changed. You already got a bad health condition, diabetes, hypertension, and the banker will need to do their admin work to either put a loading on you, impose a loading on you before release. That means you have to pay cash, or reduce the terms. Like for example, let's just say cover for 30 years, reduce to 10 years or 20 years, example. Then the premium also reduce accordingly to the amount that is financed. Or even worse, the Takaful company or insurance company reject your application. Then the banker has to come out, has to do admin work and come out the supplementary letter offer before we can release and get you to sign first, then you can release. So this is the follow-up part that I really hate. I don't know why the bank actually don't set up place at the end is for the post sales follow-up. These are post sales follow-up. It doesn't bring new sales to the bank. But then we all know operations are very hard. Very hard to get people on operation side. Should make it digital if possible in the future. Next one is the coverage of MDTA blah 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 shall be effective upon receipt of the full premium, the full contribution, including any loading access by the insurance Takaful company. So the coverage is only effective when they receive the premium in full payment. Usually, what will happen? This will happen when you have first loan release. First loan release, they will also release the insurance money together. Insurance money not released to you, released to the insurance company and then charged to you. You bill into the loan, most of us bill into the loan. So you bill into the loan, that's what will happen. Okay? And upon receiving that money, the insurance is now enforced. If you want to early get covered, you can always opt for cash. Because the moment you pay to the Takaful insurance company is already enforced and you can pay cash, no problem. Is only finance into your loan. Next one is, what do I need to do if there are changes to my contact details? Okay, if you got contact details, right, you must call the bank or visit the branch. Why this is very important? Because we have cases where the scam happened because of the address. The bank sent the letter, then the letter go to the letter box, right? The scammer took the letter and changed the letter, the address to his address or her address, and then scam the person from there. Siphon the money out. I don't know how it's done. So that's why nowadays you see this even more tighter. They make it harder. You want to change this kind of personal detail, you can either do it on the online banking, which is your own online banking and then some banks will require that you call in like this, or walk in branch, biometric verification. Okay, biometric verification address. So number 12, where can I get assistance and redress? So these are, if you have difficulty making a payment, please do not run away. Please call the bank and negotiate first. Okay. If the bank also cannot help or don't want to help or don't know what, throw you like a ball, whatever it is, you can file a KPK. If you wish to complain, you can always email to customer service. This one is customer service on your bank. If your complaint is not settled well, you're still not happy, you want to complain, you complain to Bank Negara, you email Bank Negara. But now I think they don't attend to emails anymore. You have to have a Dropbox, a note. You can leave them a note. Okay. Then there's other loan packages, other products. These are other products that's available. How do I make my money payments? Make money payments, normally the bank will ask you to open the account with them and also sign the sending instruction. Very easy. Okay. You just put money there. Anytime there's this facility, they will start deducting. Internet banking, okay, maps, underneath, okay, these are all standard. IBG 0, ATM 10, this one, they will charge all this. This one, remember here, important, your property will be foreclosed if you do not keep up repayments on your housing or shop loan, okay? And then this is the date of the PDS. So that's it, you are done. Okay, you have to sign the PDS here. You sign, if not sign, it's not valid. Okay, you sign the PDS here, and then the customer has name. You usually have to initial every page to confirm that you have read, or on the offer letter also. Okay, I think that's all for today. This is Kenny here from Property Stories. So if you want our services, you need our services, you know where to reach us. Fill in the Google form below. If you have any more questions, I appreciate that you email us. And if you have not subscribed, do subscribe to the channel. We talk about personal finance, real estate, and also business here. Okay? I'll see you again next video. Bye-bye.